Hello, my name is Craig Hughes and I'm a tax director at Brown Butler Accountants based in Leeds. Welcome to a short presentation about the taxation of electric cars for employees and businesses. This is very topical at the moment as electric cars are becoming more popular, and as the technology evolves, they're becoming a more practical option when buying a new car. Firstly, let's look at the benefit in kind position for electric cars when provided as a company car. The benefit in kind is now based on the electric range as well as the CO2 emissions. And we also need to take into account whether the car was first registered before or after the 6th of April 2020. So it's not particularly straightforward. The table on the slide shows the position for the tax year 2021-22. You'll note that for zero emission cars, this has a very low rate of benefit in kind, 1% indeed. That's rising to 2% in 2022-23. You'll note that the rates get progressively higher as the electric range decreases. Just by way of example, if an employee takes a Tesla Model 3 as a company car and the list price is £50,000, for the current tax year, the benefit in kind charge will be 1% times £50,000, which is £500. In the next tax year, the benefit in kind charge rises to 2%, so that'll be £1,000. Therefore, for a higher rate taxpayer paying income tax at 40%, their liability for the current tax year will be £200, and for the next tax year, £400. Considerably lower than the equivalent charge for taking either a petrol or diesel company car. The benefit in kind regime is also favourable for some of the associated costs of having an electric car. In particular, the provision of charging points. There is an exemption from tax for workplace charging of electric cars, and this applies for both company cars and cars owned personally, which are charged at work. Certain conditions apply, and we'll discuss those shortly. The exemption covers the cost of electricity, the cost of the employer providing the facility, and any connected services. However, the exemption does not cover the reimbursement of employees' personal expenditure away from the company's premises, for example, at home or at a service station. I mentioned just now that there were certain conditions which need to be satisfied in order for the provision of charging points to be exempt from a benefit in kind charge, and these are as follows. Firstly, there must be a dedicated charging point which is specifically designed for the purpose of charging the electric cars. The charging facility must be at the employer's premises, so for example, not at the employee's home. The facility must be available to all employees generally, whether or not they use it. And the car being charged must be driven by the employee or where the employee is a passenger in the car. One point to bear in mind is that there will be a taxable benefit if the charging points are provided via an optional remuneration arrangement, for example, through salary sacrifice. We'll now turn to how business mileage is dealt with for electric cars. And there is a difference here between whether the car is in personal ownership or whether it's a company car. For personal ownership of the car, we use the approved mileage allowance payment rates as they apply for diesel and petrol cars. So for the first 10,000 miles, you can claim 45 pence per mile, and thereafter 25 pence per mile. If more than those rates is paid, then the excess is taxed. If less than those rates is paid, then the employee can claim the difference as a tax deduction via their tax return. For company cars, we use the advisory fuel rates. Now, for hybrid cars, you use the rate for the hybrid fuel. So, for example, if it's a petrol hybrid, you'd use the petrol rates. If it's a diesel hybrid, you'd use the diesel rates, etc. If the car is a pure electric car, then the rate is 4p per mile. Looking now at capital allowances, which are available to businesses who acquire electric cars. There's a 100% first-year allowance for zero-emission electric cars. The cars need to be new and unused, and they need to be acquired before the 31st of March 2025. For cars which aren't zero emission but have emissions less than 50 grams per kilometre, they go into the main pool, and you get your normal writing down allowance of 18% per annum on those cars. Where the CO2 emissions are greater than 50 grams per kilometre, they go to the special rate pool, and you claim a 6% writing down allowance. There is a 100% first-year allowance for charging points, and it applies to purchases before the 31st of March 2023 for companies and the 5th of April 2023 for unincorporated businesses. Just turning to the 130% super deduction, which was introduced in the recent budget, please note that cars do not qualify for that super deduction. You can only get the 100% first year allowance for qualifying vehicles. However, charging points do qualify for the 130% super deduction. And this is for expenditure incurred up to the 31st of March 2023. Finally, it is worth mentioning some of the grant funding available for electric cars. For cars costing less than £35,000, a maximum of £2,500 grant can be set off against that vehicle cost. In order to qualify, the car must have an electric range of greater than 70 miles and combined CO2 emissions of less than 50 grams per kilometre. Now, what this does mean is that very few plug-in hybrid cars will qualify for that grant, because not many have emissions less than 50 grams per kilometre. A grant of up to £350, including VAT, can be applied towards the cost of installing a charger at home. Thank you for listening. I hope you found that helpful, and if you do have any queries, please do not hesitate to contact us. Goodbye.